What is the Federal Reserve doing to fight inflation? The Federal Reserve plays a pivotal role in maintaining the financial stability of the United States. One of its main tasks is to fight inflation. But what does that mean, and how exactly does the Fed do it? Inflation is the rate at which the general level of prices for goods and services is rising. While a certain level of inflation is healthy for the economy, too much can devalue money and harm the economy. This is where the Federal Reserve steps in. The Federal Reserve, often simply referred to as the Fed, is the central banking system of the United States. It's responsible for implementing monetary policy, which includes managing inflation. By carefully adjusting monetary policy, the Fed can help keep inflation at a manageable level. One of the key tools the Fed uses to combat inflation is interest rates. When the Fed raises interest rates, borrowing money becomes more expensive. This can slow down economic activity and help control inflation. Another tool at the Fed's disposal is the reserve requirement. This is the amount of money that banks are required to keep on hand. By adjusting this requirement, the Fed can control how much money is in circulation, which can influence inflation. The Federal Reserve can also use open market operations to fight inflation. This involves buying and selling government securities. By selling these securities, the Fed removes money from the economy, which can help to slow inflation. At times, the Fed may also use a strategy called forward guidance. This is when the Fed communicates its future plans for monetary policy. By doing so, it can influence the financial decisions of businesses and individuals, and thus help control inflation. In recent times, the Federal Reserve has been keeping a close eye on inflation rates. In response to higher inflation, the Fed has expressed its willingness to adjust interest rates and take other necessary actions to keep inflation under control. Despite the complexity of inflation, the Fed's role in managing it is crucial. Through careful monitoring and strategic use of its tools, the Federal Reserve works to ensure that the U.S. economy remains strong and stable. Remember that while the Fed's actions can have a big impact on inflation, they're not the only factor. Other elements like government spending, global economic conditions, and consumer behavior also play a part. In conclusion, the Federal Reserve plays a vital role in fighting inflation. By adjusting interest rates, reserve requirements, and conducting open market operations, the Fed ensures the stability and health of the U.S. economy. So, next time you hear about the Federal Reserve in the news, you'll know just how important their work is. They're not just a bunch of bankers in a boardroom. They're a crucial line of defense against runaway inflation, working tirelessly to maintain the value of our money and the health of our economy.